The bull run in the Indian equities has been toppled by persistent selling by foreign investors. Since October, FPI counterparts have sold equities worth 33,805 crore rupees. Of this, 14,300 crore rupees, or 42%, was offloaded in December alone. Analysts believe FPI started taking some money off the table ever since indices hit new all-time highs and valuation discomfort emerged. The benchmark S&P BSE Sensex hit its all-time high on October 19. This, coupled with concerns that the interest regime could turn less benevolent, triggered selling as emergency markets affected badly when interest rates go up. And since India has been a large recipient of FPI flows, there is heightened selling. The weakening of the rupee due to rise in the current account deficit is also tilted against India. That apart, some of the sale in secondary markets was also because of investment options in the primary markets. For example, in December so far, FPIs are net buyers in the primary market to the tune of 11,782 crore rupees. Let's go to Vaibhav Sanghvi, co-CEO of Avendus Capital, to understand what's driving FPIs away from EMIs, including India.
See, I think, Puneet, it is in continuation of what Fed's outcome was in terms of their meeting. They have been hawkish for a while, and precisely the reason when they have kind of changed the tone earlier towards faster tapering and guiding for interest rates hike in the second half of 2022 is where the street is taking cognizance and probably realigning their portfolios from the risk assets, which is why we have seen some amount of negative flows which have been there. It is also aided by the uncertainty on Omicron as well. And last but not the least is basically the infrastructure bill, which has been kind of being debated much upon in US as well. So all in all, I think there is some money which is being taken off before the year.
That said, while most analysts expect the trend to remain a key overhang on the domestic equities in the short term, there are some who are optimistic on FPI activity in 2022. V.K. Vijay Kumar, Chief Investment Strategist at Geojit Financial Services, for instance, sees the current FPI activity as profit booking and not selling. He further adds, FPIs have been sitting on big profits on bank stocks, which they accumulated during 2015-2020. So profit booking makes sense. While FIIs continued selling in banks between December 1 and 15, they bought insurance stocks worth nearly 5,000 crore rupees and oil and gas stock worth 2,686 crore rupees during this period. The takeaway from this data is that FIIs are not indiscriminately selling India and will turn buyers when they see value. Data compiled by IIFL Securities shows that FPI sold equities worth $2.1 billion in the sector in November, which was the highest COVID-19-induced sell-off culminated. In the last 6 months, FPI outflows from the sector have aggregated to $3.4 billion. At the end of November, FPI's allocation in banks and financials was at the lowest level since September 2020. On the contrary, FPI allocation in power and realty was at highest level since February 2018 and Jan 2018. Separately, Abhijit Bhave, Chief Executive Officer at Fisdom Private Wealth II, remains bullish on FPI flows in the next year. The recent FII outflows can be viewed as a year-end phenomena and a possible knee-jerk reaction to recent events. FIIs are expected to return in 2022 as the structural bull run in Indian equities is likely to continue and the Indian economy cruises along an expected rate of over 9% with a stable and strong central government at the helm. For now, Indian equities remain at the mercy of FPIs and investors' assessment of the severity of the Omicron variant of coronavirus. On Wednesday, market participants will track the sustenance of the recovery seen yesterday. Besides, IPO of CMS Infosystems and the listing of Metro Brands will be eyed.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.